Governments love to tell you they're working for your financial freedom. They talk about stability, growth, opportunity, as if every policy is designed to make your life better. But if you study history closely, you start to notice something governments never say out loud. They have mastered the art of using financial tricks to keep ordinary people dependent, while power and wealth rise upward, century after century. And here's the crazy part. None of these tricks are new. They've just been rebranded, repackaged, and resold generation after generation. Different times, different rulers. Same strategy. Take from the many, enrich the few. Welcome to Histonomix, where history meets money. Here, we uncover the hidden stories behind the world's biggest financial booms, bubbles, crashes, and economic revolutions, and the timeless lessons they leave behind. Let's start with the most ancient and effective trick of all: inflation. When a government spends more than it earns, it faces two choices. It can openly tax its citizens, which is unpopular, or it can quietly reduce the value of its own money. And trust me, governments have always preferred the quiet route. Take ancient Rome. The mighty Roman Empire didn't collapse overnight. It decayed from within, and inflation was one of the first cracks. Roman emperors had massive military expenses, and instead of cutting spending, they started reducing the silver content in their coins. A denarius that was once almost pure silver eventually became mostly copper with a thin silver coating. At first, people didn't notice. But as more debased coins entered circulation, prices soared, wages stagnated, and savings evaporated. It was taxation, without announcing a tax, a silent transfer of wealth. And what Rome did with metal coins, modern governments do with printing presses and digital money. Move forward a few centuries, and things don't get better, they get smarter. In medieval Europe, kings discovered another trick: forced loans. Think of it as lending money to the king, except you had no choice. Wealthy merchants and guilds were requested to support the crown, and refusal could mean punishment. These loans were often repaid late, repaid in worthless currency, or not repaid at all. Once again, the rulers kept their armies and palaces running, while ordinary people and merchants took the hit, all under the name of loyalty, duty, or patriotism. Then came one of the most sophisticated tricks in financial history: government debt systems. When Britain founded the Bank of England in 1694, it wasn't out of innovation or goodwill. It was because the government was broke and needed money to fight France. Wealthy investors bought government bonds and earned guaranteed interest. And who paid that interest? Ordinary citizens, through taxes on everyday essentials like salt, beer, tea, and cloth. The wealthy lent money upward. The poor funded the returns. It became the most powerful wealth transfer machine in history, one that survives to this day. Fast forward to the modern era, and the tricks have only become more elegant and harder to detect. Think about deficit spending. Governments borrow billions, even trillions, supposedly for development, infrastructure, public services. But look closer. A large portion goes to corporate subsidies, political projects, military spending, and bailouts. And once the debt grows too large, governments don't cut from the top. They squeeze taxpayers, reduce social programs, and let inflation chip away at purchasing power. The profits flow to bondholders and big institutions. The burden falls on the average household. And whenever powerful institutions take reckless risks, there's always the ultimate trick: bailouts. In 2008, banks packed bad mortgages into fancy financial products and crashed the global economy. But who rescued them? Governments. And who funded those governments? You, through taxes and future inflation. After the crisis, banks walked away bigger and richer. Ordinary people walked away with foreclosures, job losses, and years of economic stagnation. The entire crisis was a real-life episode of privatize the profits, socialize the losses. Even retirement systems, the thing millions rely on after a lifetime of work, are built on a trick. People pay into government pension funds, believing their money is being saved. But in most countries, governments spend that money instantly and leave behind promises. They rely on future workers to pay current retirees. It works only as long as populations stay young and growing. As soon as demographics shift, governments respond with reforms, which is a polite way of saying lower benefits, later retirement, or payouts that lose value to inflation. Now, let's talk about the modern magician's tool, complexity. Ancient governments used simple tricks like cutting silver in coins. Today's governments use thousands of pages of tax codes, complicated financial instruments, and jargon-filled budget documents. Most people don't understand how money flows through the system, and that's exactly the point. When you can't see the trick, you can't resist it. Take quantitative easing QE, a term almost no one had heard before 2008. Central banks created trillions of dollars out of thin air to support the economy. But who owned the assets that shot up in value? The wealthy. Stocks, real estate, bonds, they all surged. Meanwhile, the average person got rising rents, higher grocery bills, stagnant wages, and a cost of living that never came back down. QE saved the financial elite while quietly taxing everyone else through inflation. And then there's stealth taxation, the taxation you don't see. Prices go up, fuel becomes expensive, essentials cost more. Your salary increases, but your real purchasing power shrinks. That gap? That's a hidden tax governments depend on. Because inflation reduces the real value of government debt. It's the oldest trick reinvented for the digital age. And most people fall for it. War finance is another example. Governments raise money through bonds, rally citizens by calling it patriotic, and create fortunes for defense companies and wealthy investors. The war ends, but the debt remains for decades. Generations pay for conflicts they never saw. If you zoom out, a pattern emerges. Every era has its trick. Rome had debasement. Medieval kings had forced loans. Early modern governments had national debt systems. And today's world has inflation, complex monetary policy, debt traps, bailouts, and corporate influence over regulation. But the goal has never changed. Control the population financially. Keep them dependent. And channel wealth upward through systems disguised as good for the people. The real problem is not that governments use these tricks. The problem is that most people don't even know they exist. They assume inflation is natural, debt is normal, bailouts are necessary, taxes are unavoidable. But history shows something different. These are engineered mechanisms, predictable, intentional, and repeated across civilizations. And here is the truth. History has been whispering for centuries. The elites win not because the public is weak, but because the public is unaware. Because financial ignorance is the most effective tool of control. When people don't understand the system uses them to sustain itself. So what can you do? First, question narratives. When a government announces a new program, look for who benefits first. It's rarely the common person. Second, protect yourself with assets that hold real value, not just currency that can be inflated away. Third, learn history. Every financial trick happening today has happened before. The only difference is the vocabulary. And finally, understand this truth. Systems don't exist to make you free. Systems exist to survive. And they survive by keeping you in place. If this opened your eyes, hit subscribe, because history has already shown us the truth. And here on Histonomix, we reveal it, one story at a time.